All right, Brian, you want to go ahead and get us started?
Sure. Good afternoon. I'm Brian McNew, the 2021 chairman of the Greater Shreveport Chamber of Commerce, and I want to welcome you to our webinar. Our goal with this webinar series is to provide our business community with the latest information we have on the COVID-19 pandemic, the government response, and the best ways to reopen our economy safely.
Good afternoon. I am Barry Regula, the 2021 Chairman of the Board of the Bossier Chamber of Commerce, and I'd like to welcome you as well to our webinar. The passage of the most recent stimulus package in December brought with it some updates and changes to the Paycheck Protection Program, or PPP, and the Employee Retention Tax Credit, or the ERTC.
Both of these programs were instrumental in helping to support small businesses last year, and the recent changes have made them more accessible and more flexible for many businesses. To help us understand the latest information on the PPP, we have Marshall John, Commercial Lender, and Wiley Levine, Vice President Investment Officer at Community Bank of Louisiana.
And to help demystify the ERTC, we have Kelsey Dickerson and Ashley Kirby, both tax managers at Hurd McElroy and Vestal. First, let's begin with an update on Operation or Open Safe SBC from Tim Magner. Tim?
Thank you, Barry. I appreciate everybody. I just wanted to remind folks that we have this Open Safe SBC website that we've put up that has the most recent information on governor's orders, but also has all of the reopening regulations and restrictions and all of that. And just wanted to let folks know that we're continuing to update that on a regular basis. So I'd like to turn it over to Lisa.
Thanks, Tim. And so glad to have everyone on the call today, and thank you to our speakers. So our first speakers today are Wiley Levine, Vice President, Investment Officer, and Marshall John, Commercial Lender at Community Bank of Louisiana, to discuss the latest changes to the PPP. Welcome, Marshall and Wiley. Glad to have you.
Thank you all. We are happy to be here, and hopefully we can give some insight and clarification on this round of PPP to our fellow members of the Chamber and to local businesses in our community. The SBA, they began accepting applications for this round of PPP on January the 11th for first draw loans, and on January 13th for second draw loans from participating lenders. For the second draw, PPP allows certain eligible borrowers that previously received a first draw loan to apply for a second draw loan with the same general loan terms as the first draw. A borrower is generally eligible for a second draw if the borrower previously received a first draw and will or has used the full amount only for authorized uses. They have no more than 300 employees, and they can demonstrate at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020, or annually in 2019 and 2020. Those businesses that were not in business during the first and second quarters of 2019, but were in operation during the third and fourth quarters of 2019, they must demonstrate that gross receipts in any quarter of 2020 were at least 25% lower than during either the third or fourth quarters of 2019. If an entity wasn't in business during the first, second, and third quarters of 19, but in operation during the fourth quarter of 19, applicants must demonstrate that gross receipts in any quarter of 2020 were at least 25% lower than the fourth quarter of 19. And for those entities not in business during 19, but in operation February 15, 2020, applicants must demonstrate that gross receipts in the second, third, or fourth quarter of 2020 were at least 25% lower than the first quarter of 2020. The documents needed to show this revenue reduction, the 25% revenue reduction in gross receipts, include quarterly financial statements, quarterly or monthly bank statements, and annual IRS income tax filings. For the second draw PPP loan, an amount greater than $150,000, the applicant must provide that documentation showing the 25% reduction in gross receipts with the application form on the front end of it. If the loan is under $150,000, the borrower must provide documentation showing the revenue reduction before or at the time the borrower seeks loan forgiveness. Second draw loans They can be used to help fund payroll costs, including benefits. They can also be used to pay for mortgage interest expenses, rent, utilities, worker protection costs related to COVID-19, and certain supplier costs and expenses for operations. At least 60% of those funds must be used for payroll and costs, which does include benefits. For the loan amount, for most borrowers, the maximum loan amount of a second draw loan is 2.5 times the average monthly 2019 or 2020 payroll cost up to $2 million. The SBA has increased assistance for certain businesses with the NAICS code that begins with 72. These include accommodation and food service businesses. For those borrowers, the maximum loan amount for the second draw loan is 3.5 times the average monthly 2019 or 2020 payroll cost up to $2 million. Now, to calculate your average monthly payroll, you would add the gross wages on the 941 quarterly documents or an annual payroll report and divide that by 12 because there's 12 months in a year. For self-employed individuals that file a Schedule C, the average monthly payroll is based on the 1040 Schedule C line 31, which is the net profit, not the gross. And that is capped at $100,000. And then you would divide that number by 12. And those for self-employed farmers or ranchers with no employees, the average monthly payroll is based on the 1040 Schedule F. And for the farmers, it's based on the gross, as opposed to where the Schedule C was based on the net profit. And then you would just divide that by 12.
Hey everybody, this is Wiley Levine, piggybacking off Marshall. So if we're in the second round of PPP, but if you are doing a first draw this time, the entities that qualify and the loan terms are just as similar as the first round in 2020. The deadline to apply for a first or second draw PPP loan this round is March 31st or until the funds are exhausted. For loan forgiveness, the first PP draw loans qualify for loan forgiveness if employee and compensation levels are maintained, the loan proceeds are spent on payroll costs and other eligible expenses, and at least 60% of the proceeds had to be spent on payroll costs. The second draw PPP loans qualify for loan forgiveness if employee and compensation levels are maintained in the manner as required for the first draw PPP loan, and the loan proceeds are spent on payroll costs and other eligible expenses, and at least 60% of the proceeds are spent on payroll costs. A borrower can apply for forgiveness once all loan proceeds have been used up. Borrowers can apply for forgiveness anytime up to the maturity date of the loan. Borrowers do not need to apply for forgiveness within 10 months after the last day of the covered period. Then the PPP loan at that point, payments are no longer deferred, and borrowers will begin making loan payments to their PPP lenders.
And, overall, PPP has been an extraordinary program in helping our local businesses, especially in the Shreveport-Bossier area. At our bank, we've helped around 500 customers and funded over $60 million in PPP loans for the first round. And we are accepting applications for new customers. And if you're interested in participating in this round for PPP, you can go to our website and fill out an application. And, Wiley and I are here. And if anyone has any questions about it, they're free to contact us. So, and that's pretty much all we have for today.
All right, great. Well, we will go ahead and we'll do some questions at the end after we've had a chance to hear from Kelsey and Ashley. So thank you guys both very much for that information. There's a lot of moving parts as we've learned with these programs. So we're delighted to welcome Kelsey Dickerson and Ashley Kirby, both tax managers at Heard McElroy and Vestal, to share with us the updates and changes to the ERTC. So Kelsey and Ashley, take it away.
Okay, thank you, Tim. Good afternoon, everyone. My name is Kelsey Dickerson, and we want to thank the Shreveport Chamber of Commerce for inviting us to speak on the topic of the Employee Retention Tax Credit. Today, we're going to go over what the tax credit is, how you qualify for the credit, and how to calculate the credit. And I'm just going to abbreviate Employee Retention Tax Credit to ERC just to make it easier on myself. The ERC is a refundable payroll tax credit which incentivizes employers to retain their employees and continue to pay them compensation during the COVID-19 pandemic. The credit is available to all employers, including tax-exempt entities, but it is not available to self-employed individuals or federal, state, and local governmental entities. The credit can be claimed on qualified wages paid between March 13th, 2020 and June 30th, 2021. The original timeframe for claiming the ERC as established by the CARES Act was March 13th through December 31st, 2020. However, when the Consolidated Appropriations Act was passed in December, they extended the deadline to claim the ERC through June 30th, 2021. The computational rules for calculating the credits available to employers is significantly different for 2020 versus 2021. And so we'll be going over those calculations shortly. Per the CARES Act, employers that received a PPP loan were not eligible for the ERC. So most employers ignored this tax credit altogether because they weren't eligible for it. The CAA included a provision to allow employers that had received or will receive a PPP loan to claim this payroll tax credit. So this will open the door for many more employers to take advantage of this. And I think a lot of people are really excited about this. We're currently awaiting guidance from the IRS to determine how employers can go back and retroactively claim these credits for 2020. We believe the credits can be claimed by amending the payroll tax return or Form 941 for those quarters that your business qualifies. But again, we are still waiting on confirmation from the IRS on exactly how we're going to go back and take advantage of these credits. So now we're going to go over the eligibility requirements and the computations for calculating the credit. There are two criteria that an employer can meet to qualify for the ERC. The first criterion is that an employer's trade or business operations were fully or partially suspended due to a government order limiting commerce, travel, or group meetings due to the COVID-19 pandemic. So if your business was required to partially or fully shut down as a result of a government order, you will qualify for the ERC for the time period you were shut down. So for example, if your business was shut down between March 15th and April 15th, you would qualify for the ERC for the first and second quarters of 2020, but only the wages paid from March 15th to March 31st would qualify for the first quarter, and the wages paid from April 1st to April 15th would qualify for the second quarter. The second criteria an employer can meet to qualify for the ERC is to have a significant decline in gross receipts. And the percentage decline is drastically different for 2020 versus 2021. And so we'll go over those differences shortly. But for 2020, an employer will begin to qualify for the ERC when gross receipts in a calendar quarter in 2020 are less than 50% of gross receipts in the same quarter in 2019. And your period of eligibility will end when gross receipts in a calendar quarter in 2020 are greater than 80% of gross receipts in the same quarter in 2019. So in other words, you will remain eligible for the credit until your gross receipts have returned to at least 80% of what they were in 2019 for that same quarter. So for example, if your gross receipts go down below 50% in the second quarter of 2020, and they don't return to their normal level by the third or fourth quarter, you'll still be eligible to claim the credits in those quarters until you do recover your revenues. And just to show the difference for 2021, when gross receipts in a calendar quarter in 2021 are less than 80% of gross receipts in the same calendar quarter of 2019, that's when you'll qualify for the credit. So 2 points to mention here. The percentage for measuring the decline in revenues goes from 50% in 2020 down to 20% in 2021. And secondly, 2021 gross receipts are compared to the same quarter in 2019, not 2020. So both of these changes will significantly expand the number of employers that will be eligible for this credit. And one other point to mention is Section 207 of the CAA included a provision which gives employers the option to make an election to use the gross receipts from the immediate preceding calendar quarter and compare those receipts to the same quarter in 2019. So for example, if an employer is not eligible for the ERC because they could not satisfy the gross receipts test for the first quarter of 2021, they can make an election to use the gross receipts from the fourth quarter of 2020 as compared to the fourth quarter of 2019. If there is a reduction of more than 20%, then the first quarter of 2021 will be considered an eligible quarter. Next, we will go over what qualifies as qualified wages. So qualified wages include FICA wages paid for certain employees. It also includes health plan expenses allocable to these wages. And then there are also limitations on qualified wages as far as what size employee you are. So for 2020, you are considered a large employer if you have more than 100 full-time equivalent employees. For 2021, you're considered a large employer if you have more than 500 full-time equivalent employees. And I think Ashley will go over these in her calculations, but just keep that in mind that the difference for 2020 is you're considered large if you have more than 100 full-time equivalents, and you're considered small if you have less than that. But for 2021, that threshold jumps up to 500. So now I'm going to turn it over to Ashley, and she'll explain how we calculate these credits.
Okay, for 2020, you're limited to $10,000 of compensation per employee for the year. Employers that averaged more than 100 full-time employees in 2019, then the credit is allowed only for wages paid to employees who did not work or did not work at full capacity. Employers that averaged 100 full-time employees or less in 2019, you get to include wages for all current employees.
Ashley, can I get you to come closer to the microphone a little bit? We're having
Yes, sir.
a little trouble hearing you.
Can y'all hear me now?
Yeah, that's much better. Thank you.
Okay, sorry about that. Let's see.
Can you repeat what you were saying about?
I sure can. Let's see. Okay, for 2020. So for 2020, you're limited to $10,000 of compensation per employee for the year. Your employers that averaged more than 100 full-time employees in 2019, then the credit is allowed for only for wages paid to employees who did not work or did not work at full capacity. Your employees that averaged your employers that averaged 100 full-time employees or less in 2019, you get to include wages for all current employees. Okay, so going to 2021, it's still limited to $10,000 of compensation, but it's per quarter instead of per year. Your employers that averaged more than 500 full-time employees in 2019, the credit is allowed for wages paid to employees who did not work or did not work at full capacity. Employers that averaged 100 full-time employees or less in 2019, the credit includes wages for all current employees. The full-time employee means with respect to any month, an employee who is employed on average at least 30 hours per week. Okay. There are some special rules. You have to exclude paid sick leave and paid family leave wages. You have to exclude wages for Section 45S, paid family medical leave credit, and exclude severance pay for former employees. The health plan expenses include premiums for group health, dental, and vision plans, and this is the employer and the employee pre-tax contributions. Self-insured plans use the COBRA rate or the actuarial calculation. Okay. You just use a reasonable approach to allocate the health plan cost among the covered employees. You also include the contributions to HRAs and FSAs. And you have to exclude contributions to HSAs or your qualified small employer HRAs. And your HRAs are your health reimbursement arrangements. Your FSAs are your health flexible spending accounts, and your HSAs are your health savings accounts. Okay. So when you're calculating the credit, the limits per employee, they differ for 2020 to 2021. For 2020, it's 50% of qualified wages of up to $10,000 per employee, and it's capped at $5,000 credit per employee. For 2021, it's 70% of qualified wages of up to $10,000 per employee, and it's capped at $7,000 as your credit per employee. That's all we have as of right now. Do y'all have any questions for either Kelsey or I?
And that is actually a great question, if anyone has any questions. So it is now time, thank you ladies for that presentation. It is now time for questions. So please use the chat function to type your questions and we'll share them with the speakers. We do have one question in the chat box, and it is from Brian McNew. And he would like to know, would the gross receipts requirement be on a cash or accrual basis? Because a business has an invoice out does not mean they have been paid.
So the gross receipts test would be measured on how that taxpayer, how that employer files his tax return. So if his tax return indicates he's cash basis versus accrual, that would be the basis he uses to measure his gross receipts.
Great, thank you. Tim, you're muted.
Yep, there you go. Kelsey, actually, the ERTC this time is also advanceable, correct? So you can actually request the potential the credit in advance rather than waiting for to do it on the back end, I guess.
That's right. You can get an advance of this credit by filing Form 7200. And then I believe there will be a reconciliation of the tax credit that you were advanced versus what you're actually eligible for when you file your payroll tax return at the end of the quarter.
Okay, all right, terrific. And Marshall and Wiley, with regard to PPP, the difference, there's I think you went over this, but I just want to make sure I'm clear. There's a different a percentage of the PPP loan that needs to be applied to payroll with the second draw, correct?
Yes, 60% needs to go to payroll expenses.
Versus the first draw, it was.
Well, the first draw, I think it was 75%, and then they lowered it to 60%. So now it's at 60% as well.
Okay. But that means that 40% of the funds can be used for rent or other things.
Yes, the other 40% can be used for mortgage interest expenses, utilities, rents, or if you wanted to just use it all for payroll and use 100% for payroll, you can do that.
Okay.
Over the 24-week period, we found that most people were spent more than their PPP loan just all on payroll.
And so there is still a 24-week window?
Correct.
Yes, sir. Yes, sir.
Okay, so previously you had to make a selection. It was either like an 8-week window or a 24-week window. Is that correct?
Yes, sir. Yes, sir. And that still applies for this round as well.
For the second draw. So you can, if you have a high payroll, or if you intend or you plan to use it all up, you could do it in that 8-week window, but you have to make that election up front?
Yes, sir, on forgiveness. And with forgiveness, I mean, kind of like last year, the whole thing is still fluid. But, to our knowledge at this time, that's correct.
Okay, very good. Kelsey and Ashley, are there any steps that, as folks are preparing for their filing their 2020 taxes, and they either haven't taken advantage of this or they did, and are there any sort of paperwork, or are there any sort of documentation requirements, or that you recommend folks pull together prior to talking with folks like you about their taxes for 2020?
For 2020, as far as going back and claiming the credit, we just recommend going in and looking, especially if you have a payroll company, most of them have the ability to pull reports and show you that you would qualify. And so just looking at that for 2020, and then for 2021, just at the end of the quarter, go in and check your gross receipts and compare those to see if you qualify.
Okay.
So no documentation really, I don't think is necessary to.
Have you seen any issues with folks who either took the credit or didn't take the credit, and where, you know, they shouldn't, or they're in particular businesses where you're like, hey, you know what, this type of business or this type of organization, you may not want to, you know, you may not want to do the advance because there's some question about whether you would qualify?
Personally, I have not seen many, just because the majority of our clients did receive a PPP loan, and so they were not eligible before December 27th to claim this credit. So we're just now kind of starting to get the ball rolling on seeing who qualified. So I'm sorry, I really can't answer your question. I don't really know yet at this point, but
We're still waiting on more guidance to come out
Okay.
regarding the credit.
Because I know there was some question early on with partnerships or LLCs or things like that, that there was some different rules about, especially if you had multiple companies under the, you know, linked with the same LLC or whatever. And I just didn't know if that was something that you were cautioning folks about approaching that from that vantage point.
yes, and there are aggregation rules out there as far as calculating your full-time equivalents and calculating your gross receipts. So for large employers, it will be a little bit more challenging, because only the wages that were paid to workers not to work will count. So that will be, I think, a little bit more challenging for people to document. But for those employers that are below the threshold for large employers, I think that it should be, they have a big opportunity here. And two, you know, if they did receive a PPP loan, you know, we also can't count those wages towards forgiveness that we also count for the ERC. So it's really going to be, we're still also waiting on guidance on that too, as far as ordering rules go for the ERC versus the PPP. But people will have to keep really good records as far as what wages they're using to qualify for PPP loan forgiveness versus the wages they're using to claim the ERC.
Okay. And Marshall and Wiley, were there any sort of similar question? Were there any businesses that you saw with the first round that either had trouble, or anything that you've seen with regard to forgiveness in either round, I guess the first round, where you say, hey, you know, sort of lessons learned or suggestions that you have for folks ahead of time, whether that's from a paperwork standpoint or whether it's from how they are, you know, qualifying for the loan or anything like that?
That we had one business I know of that, you know, they claimed employees, but really their employees were 1099s, and they would have to file independently because they file their income or report their income on the Schedule C. I do know that the SBA has passed, or they're in the process of getting a new form for the 350S, the 350-8S, the short form. Originally it was $50,000 or less, but now it's $150,000 or less, where you don't have to show any documentation on the front end when you're applying for forgiveness. Now, if the SBA does randomly select that loan and they perform an audit, then that customer would have to provide documentation for it.
Okay. And here's a question from Barry. So you mentioned that you had about 500 clients in the first round. How many clients do you expect will qualify in the second round? Just sort of.
I'm really not sure. I think right now we have about 150, 160 clients that have submitted applications through us, and, you know, more coming by the day. I guess it just depends on, you know, who qualifies, who doesn't qualify. And then of course the funds, you know, because the deadline, I believe, was March 31st of this year, or until the funds exhaust. And, you know, right now we really don't know if the funds are going to go quickly like they did last year, or if they're going to be around till that March timeframe or in March. So we really aren't sure how many total customers or total applications we're going to have at this point.
And I know that there were some different qualifications that both Lisa and our chambers qualified with C6s were eligible for the second round. So we've both been good doobies and gotten our paperwork put together with all of that. So I know that there's some nonprofit organizations who weren't eligible in the first round. And I know there's also some effort, particularly with regard to performance venues, that they have more opportunities this time around than they did in the past. Okay. Any other questions? Just put them in the chat.
I don't see anything.
No. Okay. Any final words, Kelsey and Ashley? Anything again people should be aware of? Get your paperwork in order. Talk to your payroll company. Anything else?
Yes, if you had to shut down, you don't also have to meet the gross receipts. So if you were required to shut down at any point in time or partially shut down, you will qualify for this credit. So that was one thing I don't think we mentioned. So.
Okay. Marshall and Wiley, anything else? Any final words of wisdom from you?
No, we're all good here, guys. Thanks for having us on today.
Thank you. We appreciate it.
All right. Lisa?
Okay, I just, from the Bossier Chamber as a partner in this endeavor with the Shreveport Chamber and the African American Chamber of Commerce, we just want to say thank you again for coming to the Zoom meeting to bring us all this valuable information. And we're looking forward to continuing to work with all of you and appreciate our partnerships with our sister chambers. And thank you to our chairmen of the board for being with us today as well.
Indeed. Thank you, everybody. We'll post this on our website so you'll be able to share it with family and friends. So have a great rest of your day. Thanks, everybody.
Thank
Take
you.
care.
Thank
Thanks.
you.
Bye-bye.
Thank you, Tim. Thank you.